Hi, I'm Roger Montgomery from Montgomery Investment Management. Let's not mince words. Our timing of the launch of the Polen Capital Global Small and Mid Cap Fund was nothing short of discouraging. The fund was launched at what turned out to be the absolute peak in the market. And as a significant investor personally in the fund, I can definitely empathise with every investor's experience. But I also know investing in high quality, fast growing, small global companies is an excellent path to long-term wealth accumulation, and I've recently added to my investment in the fund. Joining me to discuss the fund's performance, current market conditions, and perhaps an individual opportunity or two is Rob Forker from Polen Capital Global Small and Mid Cap Fund. Thanks for joining us on the call, Rob.
Thank you, Roger.
The global sell-off has been tough to navigate. It's been particularly challenging for investors who focus on smaller quality and growth companies. Can you explain why you believe high-quality small cap growth has performed relatively poorly recently?
Yeah, it's a combination of inflation, war, and uncertainty in general. That combination is always difficult for stocks, but is particularly challenging for quality small cap stocks in a risk-off environment. So quality stocks normally trade at a premium price to the rest of the market, and as they should, but that premium is challenged in an environment like the one we are in right now. So here's what we think matters the most. The health of the companies we own remains strong. Fundamentals continue to impress. This is evident from the earnings reported, conferences we've attended, industry data, and one-on-one calls with management teams. And with all that said, we remain constructively paranoid. So we are constantly studying the risks with the companies we own, and we will adapt as conditions change, of course. But bigger picture, we believe that we own companies that are secular winners and that will compound their earnings at very attractive rates for a very long time. The recent events do not change the long-term trajectory of these great businesses. And importantly, the companies we own are led by great management teams that will adjust if a substantially more challenging economic environment is indeed ahead.
And Rob, listening to your answer, I remember Warren Buffett once suggesting that our job as investors, or anyone's job as an investor, is to purchase at a rational price a part share of an easy to understand business whose earnings are virtually certain to be materially higher in 5, 10, 20 years from now. What it sounds like you're saying is that the businesses in the portfolio are substantially growing or growing their earnings substantially, and they will be significantly larger in years to come. Is that right?
Absolutely. So the beauty of the types of companies we own is that while their share prices may rise or fall any day, month, quarter, et cetera, the businesses themselves are compounding. So their intrinsic value is getting that much stronger because the types of businesses we own have competitive advantages, and the passage of time makes them that much stronger and healthier as we look to the future.
Yeah, friends, time is the friend of a wonderful business. I remember that one as well. Tell me, Rob. It's obviously been a tough time in the market. Have there been any lessons learned through the process?
Yeah, so we have a student mindset, right? We're a curious team that's always learning from our successes and failures. What's peculiar about this time period is that typically we learn when mistakes fall off track, right? When the fundamentals change. And this can be because the management teams don't execute well, or competition changes, or macro environments change. We haven't seen a fundamental change yet. Again, it gets back to the constructive paranoia. We're always watching out for that. We think the lesson of 2022 is going to be stay the course. These are great companies and they're executing. And in times, crises like these, they typically come out the other side better off. This is because they have strong balance sheets and their competitors do not have those same advantages.
Yeah, the sharp sell-off that we've seen, is a function of panic. And the panic occurs because I think investors are worried about the safety of their capital. It's a common question. People are seeking reassurance about the safety of their money. So perhaps thinking about your philosophy and the portfolio construction process, as well as stock selection, what are the reasons to be optimistic rather than pessimistic?
Yeah, we are incredibly optimistic. The way we view it, the current landscape, is it's great companies at great prices. So the way we've been studying the marketplace, and don't get me wrong, we have the same unease, right? I'm invested in the strategies alongside all of you. I, like Roger, also added to my holdings within the fund because I, again, view this as an opportunistic and optimistic time period. But it's worth remembering that what we do at the investment philosophy of Polen Capital is over 30 years old, right? So it's a tried and true process where we are finding the best of the best, right? These quality companies that can compound over a very long time. And our style may be out of favor for these periods of time, but over the long term, we're going to be better off. And these businesses are going to create that wealth creation from the duration of their greatness.
Fantastic. And if, I know it's late in the evening over there in the US, and so I'll let you get back to your family. I've got one more question for you, Rob.
Yeah.
We both know, and we've done this for a long time, we both know this storm will pass. So what I'd love you to do is just pull out one company that you believe, and I know there's a lot of them in the portfolio, but just one that you believe has great prospects.
Yeah, we're particularly excited about Euronext. This is a continental stock exchange, continental Europe stock exchange. They're number one in nearly every segment that they participate in. So think equity listings, debt listings, derivatives, et cetera. This is a great company led by a great management team. So we hosted the management team in our offices in Boston a few weeks ago. They're excellent capital allocators, and they're the type of a company that benefits from the current turbulence. So of course, the more activity and volatility there is in the markets, they get paid more, right? Per transaction, clearing, stocks, bonds, et cetera. This company trades at about 13 times 2023 earnings. It really signifies how inefficient the markets are right now. And this concept of whether a company's great, good, bad, average, et cetera, it's basically down the same. This company is down about 20% year to date, even though the fundamentals are better, not worse. And valuation is incredibly attractive.
Terrific, Rob. Thanks very much. That's all we've got time for today. For those of you who are invested in the Polen Small and Mid Cap Global Fund or considering investing in the fund, we'll be in touch with Rob again regularly throughout the year, and Rob will be in Australia to visit and talk to clients. I hope you've got something out of today's presentation and look forward to talking with you again soon.